The same trading setup keeps happening on the NASDAQ, and we've got to talk about it because it happened again on Friday. We got a rare signal both here and as well as on the October 10th reading that we're going to talk about in today's video, because I think we have to understand this because the same trap keeps triggering traders over and over, which is this idea that we get this big panic sell all at once. People rush for the exit just in time to be essentially liquidity for people who buy the dip. And so we need to talk about, is this time going to be the same sort of outcome as the last time we got this signal where we rushed through the all-time highs and continue to move higher? Well, personally, my bias for now is I think it will be, but we need to take a closer look at some of the technicals, fundamentals, and sentiment in this market now. As we get started, if you could hit the thumbs up button, subscribe, all that good stuff, let's get right into it. And just as a reminder, as always, this is not financial advice. I'm just a guy on YouTube sharing my personal opinions and what I'm doing in markets. The full disclaimer can be found in the description. So I need to talk about this NASDAQ trade that I took on Friday because it's identical to the trade that I took on October 10th. Now, on October 10th, there was a huge sell-off that sent retail traders, institutional traders, everybody panic selling and rushing for the exit. We saw a massive one-day drop only to see that reverse course by Monday and actually drive through all-time highs. Well, let me show you what this looked like in the options market through the put to call ratio. If you have the Edge Finder, I just navigated to market sentiment and found put to call ratio. What we can see here is we've selected for the SPX 500 and we can see something interesting happening. Now remember that the options market is a huge amount of the kind of money moving around in the financial markets. And when we see a huge surge in puts, what does that mean? It means the crowd, the population, the market itself kind of rushed to buy bearish bets or insurance for their portfolios or making a speculation that they think the market is going to move lower. Well, we've seen this a couple different times in recent times, and all of the instances on this chart have been excellent buying opportunities. Let me show you. Let's go back to September 17th, where we saw a significant spike in the put to call ratio. In fact, triggering above our red line here, which is our bearish sentiment threshold. We can see there was a huge surge for put demand. And what we can see is that right as the market got scared, right after that, we actually saw the market rally higher. Well, it happened again on that fabled October 10th day that we just got done discussing. The market got super scared and we saw huge demand for puts rush into the market. Sure enough, that was yet again an excellent buying opportunity right as everyone got scared. Crowd sentiment going extreme one direction can sometimes produce some excellent contrarian signals. Well, on Friday, it happened again. Just like October 10th and that previous date that I mentioned, we saw the market sell off quickly, causing bearish sentiment to spike to a very high level on the put to call ratio. And so now the question is, will we get that same scenario to happen again? Well, as a trend trader and as a momentum trader, the price action of the NASDAQ, the S&P 500, etc., has been up this year, and momentum, in my opinion, favors the bulls. And this pattern has been so consistently good at predicting market bottoms in the short run recently that until proven guilty, I'm going to assume that this signal, in combination with macro, which is, you can't just look at this indicator by itself, you've got to look at other things too. But this indicator, in combination with good macro scores, which we'll take a look at in just a second, have produced really excellent timing signals for potential buys. And so I bought the dip on Friday, and I bought the dip pretty aggressively. I bought it in two places specifically, both very much kind of higher risk, higher reward types of areas. Specifically, I bought the QQQ, which is of course the NASDAQ in ETF form. After hitting this support level and also tapping into that 61.8% retracement zone, I actually ended up buying the dip on the NASDAQ, the QQQ, and I actually put a stop just below structure. You can see that we have rebounded nicely from those lows and have actually gapped open and continued pushing higher here so far today. So again, innocent until proven guilty, the trend is intact. Let me show you some moving averages. And what we can see here is we had a beautiful retest of the 50-day moving average where we sharply responded to the upside. This market is in an uptrend. Fighting that uptrend has been perilous for many traders this year who have constantly tried to fight trends in things like gold and the NASDAQ. Look, The trend is up until it's not. When it's down, when we're trending lower, I'm with you. We start to get more cautious. We start to get more bearish. But there is no reason, in my view, from a technical perspective and a sentiment perspective, to be bearish the NASDAQ. But what about the fundamentals? Well, for the fundamentals, let's take a look at our US economic heat map, which will give us a bit of a diagnostic on what the US economy is looking like in specific tuned into stocks reading. What we can see here is GDP growth looks pretty solid. Last week we had services PMIs, very solid. Retail sales look okay. Inflation is being kept at bay relative to forecasts. Unemployment rate still at just 4.3%, which is historically pretty low. ADP numbers last week came in better than expected. Long story short, most of our metrics here under the stocks impact column are looking bullish for stocks. So to keep this really simple, why is the Edge Finder giving the NASDAQ such a strong algorithmic reading on our top setups simplified view page? Well, it's because sentiment is showing the crowd is scared and bearish, giving us a contrarian bullish signal. Technicals are still in a nice longer term upward trend, and economic data still favors stocks. This is why on the channel, I say to keep it simple. The nice thing about the Edge Finder is the Edge Finder is not going to tell you exactly when to buy or sell the market, but in combination with a solid technical game plan and good risk management, the Edge Finder can add more insights to your trading by keeping you aligned with these three core categories that we talk so frequently about on the channel. If you're a fan of the channel, you know I often call it the three FA, SA, and TA. What are these? Technical analysis, which I think most traders have a decent understanding of, sentiment analysis, which is tracking crowd sentiment and institutional activity, which we do under the sentiment score, and fundamental analysis, which is looking at all of our jobs data, economic growth metrics, and inflation statistics to see how those things favor up or down movement in the charts that you're watching. So NASDAQ longs made incredible amounts of sense to me on Friday, and the system that I use, the Edge Finder, confirmed it very strongly. We've been perfecting the Edge Finder over the last few years, and it is currently on super sale. It's currently 40% off for a very limited time due to our Black Friday discount. And heads up, everything in our store is currently 40% off. It is the biggest discount store-wide that we do all year long. If you want to take advantage of the one-time payment of the Edge Finder, which is currently 40% discounted, here's how you can take advantage of it. Down below in the description, click the link there, use the promo code that you see in the description, or if you have questions about the tool or you're interested in payment plans, scan this QR code that you see here right on the screen, and you can speak directly to a member of our support staff here at A1 Trading. They can set you up with payment plans, they can get you extra discounts, all sorts of good stuff, but don't hesitate to scan the QR code and ask a few questions if you need to know something prior to making your purchase. We actually highly encourage you to do that. Another thing that I bought on Friday was actually the SMH Semiconductor ETF. Now, part of the reason I did this is because I have an opinion on the whole AI rally. A lot of people are calling this thing an AI bubble. Now, semiconductors are things like NVIDIA, AMD, Qualcomm, many companies that people are very, very scared of buying because they are super sensitive to the AI bubble continuing. Now, I've talked about this a lot on my channel. Is there an AI bubble? Is there not an AI bubble? Is it going to pop? Is it all going to end in flames? Well, in my personal opinion, we are probably in a bubble. The question, though, is not whether or not we're in a bubble or not. It's pretty clear that there's tons of speculative spending going on right now because we don't have some tangible, easy access right around the corner revenue that companies are going to unlock due to spending all this money on AI and data centers, etc. So maybe there is a bubble. But the bigger question is, how long will that spending go on? How long will the party go on in terms of the AI stuff? Well, in my personal opinion, we could still see multiple years of spending and development and investment. Many of these ginormous companies that are doing the spending have been sitting on cash for over a decade. Like companies like Apple, who've just been piling money up, or Google or Microsoft, these companies that have boatloads of money who are now investing it into building an AI, that's only just started. It could go on for some time. So I'm a believer that yes, you might have some speculative spending that could go on for a long time, and it could keep going. But I'm also aware that there is serious risk to the speculation that's going on in financial markets. That's why I keep stops in my trades, and that's why I manage risk by trailing stops. So I bought the SMH ETF as a trade. I'm looking for a break through the all-time highs. If we can get that, I'm going to take this stop loss and trail it into profits. But we beautifully tested the support level looking left here on this SMH ETF. Again, SMH, the semiconductor ETF, tracking the big names in the semiconductor world, which of course are fueling the data center spending stuff. And noticeably, if we zoom in over here, what you can see is that the stocks that are getting the most love here today are, once again, the technology and AI related stock. Nasdaq's up 1.7% compared to the Dow Jones, which is essentially flat today. The Russell is slightly up, and the S&P 500, which is also pretty tech heavy, is up about 1% at the time of recording this. Today's video is sponsored by Black Bull Markets. Black Bull is a New Zealand FMA regulated broker offering forex, metals, and crypto trading to their users. With access to over 26,000 tradable instruments, everything from gold, commodities, indices, and more, through their CFD platform, you can trade pretty much anything. They're also backed by one of New Zealand's largest investment management firms and provide institutional grade trading conditions. Black Bull Markets has also earned multiple industry awards for their fast execution speeds and their leverage trading opportunities on their platforms. Traders can access up to 1 to 500 leverage and choose from several platforms like MT4, MT5, CTrader, and TradingView. And something super cool is that they offer no commission on crypto trading, as well as highly competitive spreads, especially on Ethereum. And for a limited time, active traders can receive free TradingView Premium and up to $60 reimbursed every month just for trading with Black Bull. And if you're interested in copy trading, they have an expansive platform just for that. You can see real trading results from other traders in a live environment through their copy trading platform. And when it comes to choosing a great brokerage, choosing one with competitive trading costs in the form of spreads and commissions is very, very important. With their ECN Prime option, you can see spreads from 0.1 pips, which is pretty crazy. And of course, if you're a larger trader, this institutional package looks incredibly competitive, with spreads from 0 pips as well as a $4 round turn commission. Of course, there is a minimum deposit on this, but all three of these look highly competitive compared to the industry. Make sure to use the link in the description down below. We'll leave all the information you need to start trading with Black Bull and start taking your trading to the next level with their amazing platform, their competitive spreads, as well as their copy trading platform if that's something that you're interested in as well. So like I said, make sure to use the link in the description down below to support my channel and also to check out Black Bull to see if it's a right fit for you. Now back to the video. Now we've got to move on to talk a little bit about what's going on in the precious metals. The gold chart here today broke out of that 4-hour level of resistance that we've been recently talking about on the channel. So we've talked about how, gold prices topped out around $43.75 an ounce. We double topped, we broke through support, we consolidated, went lower. And so what we were looking at is what seemed to be a potential start to a bigger downward trend. And I actually went short on gold. If you've been watching the channel every day, you know I went short on gold and ultimately ended up closing out of my gold short for a very small profit, just in time, fortunately, before the thing actually would have resulted in a losing trade. But I'm no longer in any gold trades. And in fact, have something interesting that came across my desk here this morning in the form of Edgefinder scores for gold and silver. It may be surprising to some that the top setup simple page is now indicating bullishness on both gold and silver. Very interesting to see this, especially silver with a +9 score. Let's take a closer look at what it's finding on these things. We can navigate to the AI market scanner here in the top left, and we can select specifically for gold to see what it's found. While economic growth readings in the US have been relatively strong, which is a more bearish signal for gold, we have a really strong reading on the technical side of things, on seasonality, and on the 4-hour and daily chart trend. We have some neutrality in sentiment, but the jobs market has been weak for the US, giving us a more bullish reading on gold, and inflation data has been relatively under control, suggesting the Fed could continue to cut interest rates, which bolsters and is bullish for precious metals. We also have our moving averages mostly aligned in a bullish formation, and the score is even a little bit stronger on silver, which has showed really strong and aggressive buying from institutions through the commitment of traders data. And while the commitment of traders data history within Edgefinder is out of date due to the government shutdown, which has stopped data from coming in on this, what we can see here, at least as of the time before this data stopped coming in, is gold bullishness was still on the rise. I think it's fair to assume that there's probably some dip buyers out there in the institutional world that may be looking at this recent pullback as an opportunity to step back into the precious metals. Again, from a 4-hour chart perspective, you've had a break of this resistance point. I'm looking at this area with an interesting potential opportunity to look to get long and to actually potentially look for another move higher in gold. We'll see if we can get it. As always, if I take this trade, I'll share it inside of our VIP signals room. All trades that I take, including the NASDAQ trade, for example, gold and silver trades that I take, currency trading setups, all of them get notified inside of our VIP group. You also unlock access to Marco's trades. You can get Chris Pulver's trades and Ivan's trades as well. We have an active chat room, educational material, and so much more. If you're looking to take your trading to the next level and looking to actually learn something, consider joining our VIP group, which is also on super sale for our Black Friday discounts, linked in the description below. Of the two, I actually think silver might be the better opportunity in my personal opinion. I'm looking for a pullback to the 38.2% retracement around the $49 an ounce mark. I think from there, we could have more upside in precious metals. And you might say, well, Nick, last week you were literally bearish on precious metals. And that is true. I won't shy away from the idea that I essentially changed my opinion, and I'm allowed to do that. And so are you. As a trader, we are allowed to change and reverse our opinions on things pretty quick. And actually, I encourage, in terms of looking at your trading, being open-minded to saying, hey, I was wrong about a particular direction. Now, I made money on my gold short. I didn't lose anything. I actually made a profit. But I still think that my directional bias of thinking we could get bigger downturn in gold prices at that time, I changed my mind. I essentially said, I don't think we have as much downside as previously thought, closed out my trade for a profit, and now we see prices starting to move higher. Here's a look at the Bitcoin to gold ratio, however, which is interesting because Bitcoin is still underperforming gold here. Despite having a pretty risk-on environment in stocks recently, it's interesting to me that over the last several months, gold has actually been outperforming Bitcoin, which tells you that maybe this market is more narrow than we thought. What I mean by that is, yes, the stock market as a whole is up, but it is largely carried by a small collection of stocks at the top end of things, specifically your Apples, Microsoft, Googles, etc., that are doing really well and are very big within the US stock market indices. Those stocks are doing well, but the average stock or the average risk-on asset like cryptocurrency is not doing very well, especially when compared to gold. I think that if you're looking for risk on to really rally into year's end, this chart will become very important. Let's see if we can actually put in some sort of higher high on the Bitcoin gold ratio. What I mean by this is if we can actually see a breakout in the Bitcoin to gold ratio, perhaps that suggests that risk on is back into the picture. But for now, the trend here is still to stay a little bit cautious in terms of positioning. We talked about crowd sentiment last week as well, with the AAII investor sentiment survey showing a little bit of bearishness is still in this market. So until you want to, if you want to call like a blow off top in risk assets and everyone is super overly euphoric bullish, we're just not seeing that yet. You still have kind of an equal bullish to bearish ratio. I think if you want to say this market is way too euphoric and everything is pumped way too much, you'd probably see it in the sentiment, meaning bullish sentiment would probably eclipse significantly bearish sentiment, but that's just not the case. We still see pretty even distributions, which tells me we have more potential upside based on the rest of my metrics that I look at. I like seeing there's still bears in the room because that tells me there's more room to climb the wall of worry. Here's a closer look at Bitcoin while we're on the subject. Bitcoin seems to at least be holding support around this 100,000 mark, huge psychological level, and just look at the wicks that formed at that level. Notice how for 4 days in a row, we essentially came down to the 100,000 level on Bitcoin, only to find buyers immediately stepping up and buying that area. Maybe there is some upside for crypto, and I think seasonality would suggest so as well, which I'll take a look at in just a second. But I think from a technical perspective, you probably want to see on the daily chart here, this downward structure start to break to the upside. If you're bullish on crypto, you specifically, I think, would want to see like this 108,000 level, which previously was support, start to actually be retaken by the bulls. Can we get above there and stay above there? That would, to me, suggest maybe Bitcoin has more trend to the upside and perhaps can put in a new all-time high. I also would not be surprised, I'll say this, I would not be surprised if Bitcoin does put in an all-time high by end of year. Here's a look at seasonality. As we've talked about consistently on the channel here recently, S&P 500 is really following suit here. We can see risk assets doing pretty well in a period of the year that historically does pretty well for risk assets. But continuing our conversation with Bitcoin, Bitcoin has not followed suit so much. However, it's not too late for us to see some sort of catch up in cryptocurrency where we could see an end of year rally on it. Again, history suggests that this period of time in the year, in the last 10 years, has been some of the strongest performing months of the year for Bitcoin. The dollar index has also been rejecting here so far this area of resistance around the 100 mark. Could we be headed back down to move lower in the short term? Possibly. Let's take a look at some data. While the US economic heat map has a decently strong score for the US dollar, you have to remember that currencies are all relative to one another. They trade based on relative strength. Let's take a look at what I mean by that. So if you only look at the US economic heat map, it doesn't tell you the full story for analyzing the strength of the dollar. I think you also probably want to look across the spectrum of currencies and see what other places or other major currencies are delivering in terms of their economic performance. So when we take a look at the economic surprise meter, we can see that the US dollar is putting in a pretty strong read. But the challenge here is that you have several other currencies that are also putting up strong reports. Let's take a look at some of our strongest currencies relative to weakest currencies. Strongest currencies would include currently the Canadian dollar, the Australian dollar, and if we take a look at some moderately strong currencies, let's go ahead and put that in the NZD, USD, GBP, and JPY column. And if we're talking about our weakest currencies, we would put the euro and the Swiss franc. So when analyzing the US dollar, I would say we're kind of middle of the pack, which continues to keep me in the neutral camp for US dollar. I am most bullish on the Canadian dollar at this time. Here's a look at the Canadian dollar and you can see why I like the readings. We've just clicked on the, let me scroll down so you can see it, the Canadian economic heat map here. And what we can see is some of the recent data, especially jobs data, came in really strong compared to forecasts, giving us a nice positive surprise, which is a strong thing for the Canadian dollar and Canadian stock. We can see the dollar versus Canadian dollar is starting to reflect this as the dollar has topped out versus the CAD recently. The Canadian dollar versus the Swiss franc is a currency pair that I have been long for some time and has been forming some strong rebounding signals here. I'd like to see if we can actually break through this current area of resistance to see if we have more upside from here. CAD yen also putting in some nice strength to the upside here as well, as several yen pairs are doing. You can see the Japanese yen has been moving with a lot of momentum to the downside here recently. This is the Japanese yen currency index, ticker symbol JXY. Quick look at oil prices. They remain in what seems to be a pretty resilient downward trend. This is good for the inflation story, by the way. Remember, rising oil prices can be troublesome for inflation. Falling oil prices is good for the story around inflation. This in another way is another risk on signal for now. There's one caveat that I should mention about that though. If you get substantial plummeting in oil prices, that can also signal something more dire, which is like economic underperformance or concern about the economies of the world if we're going into major recession. That drop in oil prices is not good for stocks, right? That's obviously signaling the economy is really weak. But a modest kind of growth or modest decline to the downside here for oil prices, it has been largely attributed to, just sort of a mix of a bunch of supply coming onto the market and an economy around the world that is not too hot, not too cold. So it's good for the inflation story. And if you're an Edgefinder user, make sure to check out this new feature we added. It's the AI news feed. You can select by asset what you'd like to get updates on. And what you can see here is that we have updates delivered by AI, essentially going through a bunch of news articles to give us as little of a biased report on what is happening as possible. News feeds, all sorts of things, they have a bunch of inherent bias and emotions attached to them. What this new AI generated news summary does is it just gives you the facts. It gives you some straight up stuff that what is going on with gold prices so that you can understand why moves are happening. And you can do this again for anything that you want. We have currency pairs in here. Again, our AI is scanning all of these things each day to keep you informed as an Edgefinder user. We also added this new technical heat map where you can scan for charts that have really strong scores, strong strong technical readings based on a collection of moving averages and recent volatility, so you can find charts that are moving and in a nice trend up or down. The Edge Finder is only going to get better from here. So if you don't have a copy, make sure to check it out down below in the description during our Black Friday discount that I mentioned earlier in this video. And just as a reminder, the promo code to use is YTVIP. And if you have any questions or need to set up a payment plan, feel free to chat with us down below. Thanks for watching.